It's crazy.
Okay, well, it is time to go to Q3. No, this is not a football game. This is talking about the third quarter of Tesla's year, and Cern Basher is here to talk to us about an AJ printout where he is doing some speculating. I'll turn everything over to you, and you can take it away.
Hi, Randy. It's good to see you again. Yeah, now that we've dispensed with Q2 and we know how many vehicles were sold and what the margins were, it's now time to worry about the same things for Q3, even though Tesla is not really a car company.
Not a car company anymore. And everybody, most of the people that come on my channel are now encouraging us to think of it. Who cares how many cars? Who cares what the margins are? Who cares what the profit is? As soon as robotaxi comes out on, it happens, then none of that will matter. And I agree with the sentiment, but I don't agree with not paying attention to the
Right. I agree with the sentiment, and I've been one of the proponents for looking out, looking forward, and seeing how the business model will change. But we do live in reality.
Yes.
And for now, the auto business is a key profit driver for Tesla.
Right.
Yep. All right. So let's dive into Q3.
All right.
All right. So we left our last show with this image, Cybertruck with the number 3 on the side, and it must mean it's time to talk about Q3. So we shall.
All righty. Good.
So something interesting is going to happen in the next couple of quarters. Do you have any idea, Randy, what that might be?
Something interesting. Something that's kind of a broad.
You love my vague, open-ended questions, don't you?
Yeah, right. Something interesting is going to happen in the next 2 quarters. No, I have no idea what you're talking about.
So Tesla may well cross the 100 billion in annual revenue milestone.
Yes.
This chart shows Tesla's quarterly revenue. The red bars are actuals. The blue bars are a couple of guesses.
Yep.
My guesses, not predictions. Don't hold me to it.
Yep.
But if this transpires in this way, if they produce, 26, 27 billion in Q3, just under 30 billion in Q4, then the rolling or the trailing 12 months revenue numbers look like this.
Mm-hmm.
And Q3 would be close to 100 billion.
Mm-hmm.
And Q4 would be over.
Okay.
Now, I don't know whether Q3 will get us that close. I don't know whether Q4 will get us over, but we're getting to be in the ballpark.
Right.
And I guess you could say, well, we have been now for a while.
Yeah, and the thing I talked about the other day on this is that I'm anticipating that 2025 will get back on the 50% per year path based on what Elon has said, based on FSD, based on the expansion of energy, based on all kinds of reasons, all the new products that are coming out. So we could be looking at 150 billion the next year and 225 billion the following year. We could be looking at $400 billion, and we would then be the largest company on the planet. Well, no, I'm sorry.
Yeah.
We would still be under Walmart in sales, but over them in profits probably at that point.
Sure. Yeah, Walmart has very low margins.
Right.
Now, an interesting thing about this chart is there have been some pauses before in revenue growth.
Mm-hmm.
Right, and even back here a little bit. So this little pause is not unprecedented, and frankly, I would say that it's very rare or almost impossible to have a company that just has consistent, year-over-year growth.
Right.
There is going to be some cyclicality in a business, particularly a company that makes automobiles. That's a very cyclical business.
Right.
Right, and actually to have, more or less flat revenue is actually quite an achievement in what's been a very difficult market for selling vehicles.
Mm-hmm. Mm-hmm.
Okay. All right. So our friend AJ has put together an amazing sort of analysis here of what Tesla's third quarter might look like.
Mm-hmm.
And I would encourage people to go to his post. I think there's like 65 or more charts. I'm just going to show a few of them. This is his chart for Tesla's revenue projection for Q3. So every bar on his chart on the right side is his projection. It's got a little E for estimate here.
Mhm.
Okay. So he's projecting revenues of 26.1 billion. And you can see that the auto business about $1 billion more than last quarter. Energy a little bit less. Energy had revenues of 3 billion last quarter. He's predicting 2.4 billion. And services and other of 2.7 billion, up from 2.6.
Right.
Okay. And he's got a whole lot of notes and gray on the right side. I won't go over all these. It would take us too long. But he gives them information sort of backing up some of his numbers here.
I think the least obvious one would be on energy, where he's not projecting or expecting that they will actually produce any less or have orders for any less, but rather that the energy shipments will be choppy, and therefore that last quarter could be, and would be maybe one of the most speculative things he says.
Yeah.
Last quarter could have been a choppy up a quarter, whereas this one we might want to conservatively say could be choppy down. But I think
it seems reasonable to be
100%
conservative.
speculation. Yeah.
Now, on the other hand, Tesla still isn't really anywhere near their stated capacity numbers on energy.
Right.
So it will be interesting to see. It could be a source of upside, but I think it makes sense to be conservative on it.
Right.
Yep. This is revenue by geography. In this case, he's just showing actual. He's not making a projection for the third quarter, but the United States, 52% of Tesla's revenue.
Mm-hmm.
And partly the reason there is the US has been relatively stronger than other countries in the world. And the fall off in China has changed that. But China accounts for about 18% of Tesla's revenue.
Yeah.
I think most people would think that it would be a higher amount.
Yeah,
Now,
I think that we could see a reversal of this in the third quarter.
possibly.
China popping up,
Yep.
US maybe being a little soft.
Possibly, yeah. The Chinese numbers may bounce a little bit anyway. Yep.
Right.
Yep. Okay. This is something that you and I looked at a few weeks ago, was putting Tesla's business into vehicle terms. So taking the energy business and sort of what are the vehicle equivalents. And this is what AJ has done here as well. So, for example, last quarter, Tesla delivered 444,000 vehicles. But when you take into account the energy business and put that into vehicle equivalents, it's like delivering 533,000. And he's projecting that will increase to 560, with 476 being vehicles, 476,000 in vehicles.
Got it.
So I think this is kind of an interesting way of looking at it and saying, well, okay, let's look at, it's batteries in different packages. One's in a vehicle, one's in a box. What's the total amount of energy or vehicle equivalents is that? And so that's a good way to look at it. And again, here's his number here for energy, 84,000 vehicle equivalents. Okay.
Yep. And then, by the way, his 476 number is pretty much in the middle of what other people are talking about right now.
Yeah. All right. So let's talk about average selling prices, and what that does to automotive margin. So you've got the margin of S and X apparently around 22%. You've got the gross margin of 3 and Y around 13%. Okay.
Yep.
And Cybertruck, when you start production, you're not making any money on it because you've got this huge plant, huge expenses, and you're not putting very many vehicles through it. So gross margin is negative, but it's popped up in June about 5% estimated margins, and he's estimating 8% in September. Okay, until the Cybertruck starts crossing these other lines, then it's a drag on the business. It's a drag on profitability. And as you're ramping it up more and more, it's kind of a bigger drag from a dollar perspective. Right. So it's actually possible for Tesla to show sort of worse margins with a vehicle that's going to ultimately probably have very nice margins.
Right.
causing a short-term problem. So it is important to kind of disaggregate some of this information and look at what's actually causing an average to go up or down.
Mhm.
And he's pointing out that the Cybertruck could be a source of, challenge for the next quarter or two. Okay. Here he's estimating what the production cost of the Cybertruck is, and he's saying that September he thinks it's going to be around 88,000 per truck. And that's down from initially 107 in March and 95,000 in the June quarter. Okay, and he gets into detail about how we figured this out from the CFO's comments, etc. Okay. All right. Here's automotive margin, and he is expecting a decrease from 13.9% down to about 13. Right. And so again, this is the Cybertruck effect.
Right.
And he's saying that this effect likely disappears in Q1 of 25 as Cybertruck's margin scales to or above the average ex Cybertruck automotive margin.
Yeah, and or if I'm right, and we get the actual finished FSD, not even the robotaxi, but just FSD complete and operating without supervision, I believe fourth quarter, we will see a massive increase in the sale of vehicles, which will result in increased margins because prices will go up. And you'll also see a much higher take rate on FSD, which will also contribute.
Absolutely. If those things happen, that would be wonderful. Yeah. So absent something like that happening,
Right.
It's entirely possible for the next quarter or two that margins continue to be the topic of discussion and the source of worry for people if you just look at the headline numbers.
Right.
But if you really dive beneath it, it's kind of it's kind of the darkest before dawn kind of situation. Q4 may look bad from a margin standpoint, but suddenly in Q1 it may look very different.
He's
If
also,
the Cybertruck's margins pop up.
He also probably isn't taking into consideration at all the fact that if interest rates come down, which it certainly appears that they will, probably 50 basis points at the September meeting, that will reduce the amount of money that Tesla has to pay to bring down the interest rates on their special at 1.99. And in fact, if it comes down enough, if the normal price of the normal interest rate on automobiles comes down enough, they might not need to use the benefit at all.
Yeah, and then there's also the other thing too of the impact of exchange rates.
Right.
So interest rates have multiple effects. There's the first order, second order, and even third order effects.
Right.
The second order effect is certainly how that impacts exchange rates, either in a positive or negative way.
Right.
And that can be a big deal in any particular quarter as well. So there's a lot of different moving parts, and it's never wise just to look at one number and say, oh my gosh, this business is doing great or poorly. There's often a lot that goes into that. Yep. So from a net income standpoint, he's expecting an improvement from 1.478 billion to 1.63 billion, driven by higher volume and the absence of restructuring charges.
Right.
So that's good news. And then from an earnings per share basis, I heard you talk about this morning. AJ's at 58 cents.
Mm-hmm.
And again, for me, this is the least important number because it just falls out of the calculation of everything else.
Sure.
And it's very sensitive to very minor changes to things above in the income statement. But still, it would be an improvement.
Yes.
Over 52 cents from last quarter.
Mm-hmm.
Okay. All right. So from a operating cash flow perspective, about 3 billion in operating cash flow.
Wow.
So still very healthy.
Yeah.
Right. And then this is kind of interesting from a depreciation perspective. Tesla's depreciation charges now are about 29% of the total cost of what they have invested in property, plant, and equipment. Right. They've depreciated 29% of that investment.
Okay.
And he shows here in the gray box halfway down that GM, for example, has depreciated about 41% of what they've invested. Right. So depreciation is a non-cash charge. It reduces your earnings, but it doesn't reduce your cash flow.
Sure.
Right. So if you are a company that already has depreciated a lot of your assets, then that non-cash charge potentially could be smaller. And Tesla, because the plants are newer, the depreciation charge is higher. So that hurts their earnings more so than it might a GM. GM's factories are more depreciated. They're still pumping out cars, and so they get the benefit of that, whereas Tesla doesn't as much. So this is just another little nuance. You know, depreciation is real. The factories do degrade over time, and they will have to put more money in the factory over time to maintain it. But still, at least in the early years, it's a non-cash expense.
Yeah, and the opposite effect on this is the little talked about fact that Tesla has by far the highest ROI in the auto industry and by far the highest ROIC, return on investment, invested capital in the industry, almost in the world of all companies, certainly among factories, because Apple, for instance, is very high and they're not a factory. They have their stuff made for them. So when you have that extremely high return on invested capital, then that means that the amount that you're taking per vehicle might actually be less, even if it's a newer factory and your depreciation is more.
That's right. Yep. Another thing that's kind of interesting is deferred revenue. We've talked about deferred revenue and the unsatisfied performance obligations in energy,
right,
and how that's building over time. But let's look at deferred revenue as it relates to FSD.
right.
So AJ here in the middle, the red numbers and the green numbers, and he's showing that the additions to deferred revenue have been higher than the recognitions.
Wow.
The deferred revenue balance is revenue that Tesla can recognize at some point in the future. And over time, they're able to recognize some of it, but the balance has been growing faster than they've been recognizing that revenue as the features of FSD become more and more built out.
Right.
Okay. But the one way to look at this is Tesla right now has about $3.8 billion or $3.6 billion as of the June quarter. AJ's projecting 3.78 billion at the end of September. That they have 3.6 billion basically in future profit. This money will drop to the bottom line essentially expense free.
Right.
Right. So Tesla has, you know, if they feel that FSD is at a certain point and they can now recognize more than they have been because of the features and the capability of FSD, this one day could be a source of a pretty massive surprise in the company's earnings.
Not only the one-time surprise of capturing this, but it would also increase the margin, or the reduce the cost. Increase the profit one way or the other. It's going to increase the profit per vehicle as they get to take 100% rather than some percentage of it. And I had this conversation with somebody, maybe in Lutz, I can't, Jeff, about when they get the rest of it. When do they get all of it? My understanding is when it's feature complete, not necessarily requiring it to be unsupervised. Now, that unsupervised part might come right after it's feature complete anyway, so it may not matter. But I think it's only about when the features are all operational. But I don't know that for sure.
Yeah, we don't know that for sure. And I'm sure that Tesla is working with, you know, all the accountants and the auditors to try to figure out how they do this.
And they're probably conservative.
I would imagine so. In my view, Tesla is very conservative about a number of their accounting measures. I know a lot of people, you know, criticize them of not being, but in my view, they are very conservative. But this is a store of money that essentially will be, you know, virtually 100% profit at some point.
Right.
Now, it's not just all FSD potentially in deferred revenue. There's, you know, internet connectivity and free supercharging and different things that are in here too, but most of it probably is FSD.
Right.
Okay. So the one thing too that's interesting is looking at the pattern of this addition and recognitions and Tesla's guidance for what they say they're going to recognize.
Okay.
And so AJ sort of tracked whether they over deliver or under deliver on their 12-month guidance. So they'll say at the end of the quarter in their 10Q that we expect to recognize X dollars over the next 12 months.
Mm-hmm.
So when you go back 12 months later and look at that and say, okay, how much did they recognize? Was that guidance over delivering or under delivering? And so if you go back, historically, they have under delivered on their guidance. Right. So you can see, for example, in September of 2022 here, I'm not sure if you can see my cursor,
Right. Mm-hmm.
that the guidance was for 1.4 billion to be recognized and only 771 million was recognized in the final analysis on that.
Interesting.
Right. And so what AJ is highlighting here now is that their actual amounts recognized now seem to be much more in line with their guidance. So maybe they were, overly optimistic here again with FSD, being ready. Now they have, the guidance is a bit more. And actually now their actuals has actually gone above the last couple of quarters what they had guided.
Yeah. Wow.
So they suddenly became much more conservative and now they seem to be more in line. And here's their guidance going out. And so you can see a decent increase. So this is something also interesting to kind of take a look at to get a sense of, their accounting, how conservative they are in their accounting and their viewpoint about how FSD is going to progress.
Right.
Again, kind of an arcane thing, but interesting.
Oh, no, very interesting. And a lot of money.
Yeah. Now, this next one is kind of in the camp of companies have a lot of ways for a given quarter to kind of make things better or worse. And one lever that they have, particularly big companies, is how quickly they pay their suppliers.
Yeah.
Right. And so if they stretch out their accounts payable, they can keep cash on their books. Right. And improve their cash flow. And so you can see in the March quarter when they had their sort of inventory challenges and so on, cars on boats that couldn't be delivered, arson in Germany, et cetera, they stretched out their accounts payable a little bit.
Yeah.
Now, it's consistent with other periods.
Right.
And actually, there may be some seasonality in this too. You can see that March in the prior year was 75 days, and it's 75 days this year. Right. So I'm not suggesting that Tesla's playing any games here. Some of this just may be just the natural seasonality of the business.
Right.
But this can be material in any given quarter. Now, last quarter, they paid their suppliers much more quickly, 60 days on average. Right. So again, just to give people a sense that there's a lot that Tesla can do potentially to try to kind of smooth some of the things out behind the scenes.
Yeah. Yeah. Or again, it may not have anything to do with them trying to make their balance sheet look better or make their cash flow, make their quarter look better in terms of free cash flow. It just may be seasonal factors. Now, when you've got that much money in the bank, the decision to pay your suppliers slower seems it may be 100% in contract.
Maybe.
So,
yeah,
I dealt with all the major national mass marketers, Target and Kmart and all these guys. And, Target, for instance, when you walk in the door, it's 60 days. Other people are, when you walk in the door, it's 75 days. And and I've had Kmart over the years, I guess, are they completely out of business now? Anyway, I had Kmart over the years, which gave them 60 days terms, but they commonly paid in 90. The US government, famously pays really slow. So it may be that Tesla is, there doesn't seem to be any good reason for them to pay their people slower than contract when you've got that kind of cash. So I'm guessing this is all agreed upon.
I think for the most part it is. And again, I'm not suggesting that they're playing any games here. I don't see any evidence of that. But this is an area where companies may have a little bit of leeway, even if it's driven by contract.
Right.
Even delaying it by, a week or so can make a bit of a difference.
Mm-hmm.
It's interesting that for I think Dell Computer was in this situation for many, many years. They had a negative, what's called a negative cash conversion cycle.
Mm.
And the way to think about that is they were paid by their customers before they
That's
had
true.
to pay their suppliers.
Yes, yes.
So they
It's the
basically
best
had
kind
this
of business. That's a perfect
float.
business.
Yeah. They had this float of money that they earned interest on. It was almost like being a bank.
Yes, yes.
And that became quite considerable for them for a long period of time.
Yeah,
And that was a
absolutely.
sign of their market power.
Yeah. Yeah.
Tesla doesn't have that right now.
Yeah.
Yeah. Here's another one that's interesting, the warranty reserve. So when you sell a vehicle, you need to put some money back for warranty because you never know what issues may come up. And they now have 5.8 billion in accrued warranty reserve.
Mm-hmm.
Is that enough?
Mm-hmm.
Is it too much? Well, it remains to be seen. But so far, again, looking at the red numbers and the green numbers, the quarterly provision for warranty has been higher than the quarterly costs
Right.
incurred.
Right.
Now, it makes sense that it's higher because over time they're selling more vehicles.
Mm-hmm.
And so it's not like the warranty is going to come due this quarter. It's going to be potentially an issue over, years.
Right.
For as long as the warranty lasts. But by all measures, it looks like Tesla has been pretty conservative here too.
Yes.
And it's possible at some point they make some adjustment and say, you know what, we're being more conservative than we need to. We don't need 6 billion in warranty. 5 would be enough or whatever the
Right.
number is.
Right.
And
Right.
they take $1 billion back.
Or they just decide to reduce it per vehicle, which
Yeah.
again would increase margins. So this is
Going
another one
forward.
of those cases where it would be pretty easy for them, even within normal accounting principles, to just decide we're going to take 1% less on warranty provision, and all of a sudden you're popping the margin by a full percent.
That's right.
Yep.
Yeah. So, as we're projecting Tesla out for, each quarter, there's so many different things that can impact them, and we just highlighted a few of them here.
Right.
Right. So that's why, I don't get too exercised about whether it's 58 cents or 60 cents or some
Right.
number. It's just, that's just not that important.
Exactly.
Yep. All right. So here's AJ's bottom line. 475,000 deliveries. That would be a 9.4% year-over-year increase, 7% quarter-over-quarter. Total revenue up 11.6% year-over-year, 2% gain quarter-over-quarter.
Mm-hmm.
Automotive business growing almost 7% year-over-year. The energy business growing 55% year-over-year, and services and other up 25%.
Mm-hmm.
So pretty nice on the revenue line. Obviously, we'd like to see faster growth in revenue on the automotive side, but that's where we are right now. Gross profit growing only 1%.
Mm-hmm.
So he's showing some, pretty healthy increases in cost. Costs growing faster in energy and services and other than the revenues are growing. So that may or may not be correct.
Right.
Margins in energy actually lately have been steady, if not improving.
Right.
And same thing in services and other. So we'll see. He's got operating expenses year over year, basically flat. Operating profit up 3%, but free cash flow down 30%.
Mm-hmm.
And he's saying it's driven by the absence of a significant inventory unwind that they had earlier this year.
Right.
Gross margin 16.2% versus 18 last quarter. An operating margin of 7% versus 6.3. So whether all that is appreciated by Wall Street remains to be seen.
And then this is always the point where I do like to insert that I think AJ does a wonderful job. I think other people that are doing similar kinds of activities do a wonderful job. I used to produce something like this every so often and put it out there. I don't think my numbers were any better or any worse than AJ's. And in some cases, AJ may be digging a little deeper and finding a little bit more nuance of things that he can get his hands on. But you can be Elon Musk. I don't remember the CFO's name, but you could be Elon Musk or the CFO, and still get the numbers, the final numbers, and have lots of surprises.
Oh yeah.
Because until you get the final numbers from all the different departments, all the different directions, and then there can be mistakes, there can be errors, there can be things that go wrong. You can have sophisticated computers that are still giving you, wrong information, or you can have situations where you get a surprise yourself in terms of what your scrap rate was, or something that had happened to me in a major way one year. So while I think that this is useful, nobody should go to the bank on this.
No, and I'm not suggesting that.
Right.
And
No, I know you're not.
the reason for this exercise, just to give people a sense, is everything that goes into the income statement.
Yeah.
And all the different levers, or not all of them, but some of the different levers that impact this.
Yeah.
Right, from warranty reserve to deferred revenue recognition and things like that. And we've just touched on a few of them. There's a whole bunch more.
Sure. And I've like I said, I used to do this, but AJ, in my opinion, does at least as good a job, and probably a better job than I was. So why bother? Why should I, unless I see a big hole, I'm just going to let AJ do the work.
Yeah. And I'm not sharing this necessarily because I think AJ is right.
Uh-huh.
But I like his approach,
Right.
and he's backing it up with data and explanations and charts and so on that make it easy to kind of at least look at it and understand what he's saying.
Exactly.
Yeah. So kudos to AJ for doing this. It's a lot of work. It's
Absolutely.
a lot of work to do this.
Absolutely.
Yeah, I don't know how many hours he's spent putting all this together, but it's an incredible amount of work. So it was much appreciated. Yeah. And to conclude, Randy, as we always do, here's some beautiful Cybertrucks for you. The more they sell of these right now, the worse it'll be for their quarterly earnings. So that's kind of a strange thing to think about. But at some point, we turn the corner on this, and these will be very accretive to Tesla's earnings.
Yes.
And it looks like that may be, Q1 of next year in terms of when they really turn the corner on Cybertruck profitability.
Yeah, there's something that I learned, I don't know, about 30, 40 years ago, as I changed from a wholesale distributor into manufacturing, that when your margins are high, there's a, what do you want to call it? There's it's kind of like playing the options market. You have more leverage both ways. So when your margins on something are high, which in the case of Cybertruck or any of these vehicles are, I mean, this is a high margin business. 20-25% gross margins is a nice gross margin. And but that on the downside, when you're under break even, then you have a bigger impact because your margins are high. And then when you finally break even and go ahead, then those high margin things are going to impact you faster, and that's the good side.
Absolutely. The final thing I want to point out is the guy that parked this Cybertruck right here.
Yes.
I'm not suggesting he needs to be fired, but they need to tell him how to properly park a Cybertruck. It's not in line with the rest.
I see. Cern, I don't know what we're going to do with you, except probably invite you back for next Thursday morning. But
I don't know why, Randy. I don't know why.
Well, I hope everybody appreciated that run through AJ's numbers, and with our additional commentary put on top of it. Potentially next week, one of the things you might look at would be those Rivian numbers, just for fun. I'm not a big fan. I look at Rivian's numbers, I look at Lucid's, etc., but I don't find that the competition is really the issue right now. There's going to come a day. I think there will come a day, like there is in China right now, where the competition from BYD is an issue. But
yeah, the competition's an issue in the sense that there are vehicles being sold that are being sold for a price less than half of what they should be sold at.
Yeah.
Right? Like if there shouldn't be this, but if there was a law that required you to sell something at least what it costs you to make,
right,
then the marketplace would look very different for EVs.
Right.
right? Basically, Tesla would be one of the only manufacturers that would be, allowed to sell EVs if that was such a structure.
Yeah.
So these companies can fund these sales for as long as they have the cash to do so. And Elon, I think it was just this week, said that this is a temporary problem.
Right.
Right. Now, how temporary remains to be seen.
You know,
And in certainly a robotaxi world, it's no longer an issue
right.
because you're not selling EVs anymore. To your guest, Nick, yesterday mentioned this, right? That this whole idea of convincing people to buy EVs
Yes.
and extol the benefits of EVs is you're wasting your time. And that was a great point. I agree with what he said. We are moving to a world where we're not going to be selling vehicles anymore. We're going to be selling rides.
That's exactly right. Yep.
And you no longer have to convince people about how great an EV is.
And they won't care about
They won't
Elon's
care.
politics anymore.
No.
No, there'll be an entirely different reason for making the decision that has nothing to do with this. It's like, yeah, anyway, that's a
Yep.
rabbit hole I won't travel down.
And I would just add to that and say that the political decision of spending $40,000 on a vehicle, it's much less when you're spending $10 on a ride.
Right, exactly. Yes.
Your politics is not wrapped up in that decision.
Yeah.
Right. And so some of the stuff that we worry about today, whether, Elon's doing this and doing that and offending whoever, to me, that goes away potentially because people won't see a political decision wrapped up in it.
Yeah. No, I think the perfect example is I'm a political animal. Anybody that follows me on X knows that I'm way out there and have lots and lots of political opinions. And I can't stand the politics of Google, which is probably impacting the elections way more than Elon is. And yet this YouTube video that you're watching right now is paying for part of my living. And,
Right.
and it's Google. Okay. So, it all depends on what the impact, as you point out, is the impact important enough to actually make a decision to boycott.
Yeah, I tend to be more middle of the line with all these things. I don't see things in black or white terms. There are definitely, different elements to things. And Elon thinks in terms of probabilities as well, and I think that's a good way to think.
Yeah.
View the world through probabilities. But to me, it's never 100% this and nothing here. There's always elements of both. And I think it's important to keep that in mind for decisions. Like this week, we heard about this company in Germany that's boycotting Tesla because they don't like his views. And it's kind of like, well, you're missing out on the bigger picture, right? The opportunity to make your fleet more sustainable. Now maybe they feel like they have other good EVs to choose from, and
Right.
that's fine. But
Right.
to make it a political statement to me seems a bit silly.
Yeah.
But that's the world we live in, and that's fine.
Yeah. It's part of
Yeah.
the deal. Yeah. So
But I think ultimately it will matter less as we move to a world of purchasing a ride from Tesla.
right.
Most people are gonna get in that cyber cab and not worry about the political views of the CEO of the company at that point.
Right. Exactly. Well, okay, Cern, that was great. And as always, we thank you for coming on and helping us get a clearer understanding of our investment and our vehicle, which in some cases is both. All right. And to all of you out there, it has been great talking to you.
Thanks, Randy.